Traders Corner is brought to you by IG.
Welcome to Traders Corner, as always. Founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, I hate to think we're going to bore people in the first part of the show, but we're going to put up the chart of the S&P 500 to illustrate the bigger picture, which is kind of it's the bigger picture, but it's getting narrower and narrower. And that might, however boring it might look now, presage something exciting to come.
We can only hope so, because this intro every week has been much the same, and I've said the same thing over and over. Have a look at the S&P 500. Notice how the volatility has completely gone out of the market. And it just gets quieter and quieter and quieter. And if you look, the chart is on the screen again, as per usual. Nothing much has changed this week or in any of the last 4 weeks, for that matter. You can see that this S&P 500 it trades in a very, very tight range. It hasn't had more than a 1% daily move since early July. So nearly 2 months now that we haven't had more than a 1% daily move. And you can see those Bollinger Bands that I talk about each week, and notice how they just continue to narrow and narrow and narrow. That line at the bottom of the graph, or that bottom window there, is the Bollinger Band width, and it's the lowest ever in percentage terms, the most narrow that the Bollinger Bands have ever been for the S&P 500. So usually when you get very tight volatility and when the Bollinger Bands contract like this, usually it does precede a sudden expansion in volatility. The question is, when we get this expansion in volatility, when it eventually comes, because it will come at some stage, which way is it going to be? Is this market going to break higher, or is there going to be some catalyst that comes out of left field that causes it to break to the downside? And we don't know at this stage. It's obviously very difficult to tell. But suffice to say, it makes for a very boring market and quite difficult to commentate on, difficult to talk about, particularly when it comes to the S&P 500.
Well, I mean, the narrowest Bollinger Band ever has got to be sort of newsworthy. What about the Euro or the Stock 600? Is it pretty much the same picture?
Similar, yes. Look, here you've also got very, very narrow Bollinger Bands. They've at sort of, I think, multi-decade lows, but not the lowest ever in this case. But nevertheless, the point is still the same. You can see, have a look at your Bollinger Bands there. And just for those viewers who are not aware of what a Bollinger Band is, I'll explain it quickly. The inner, or the middle line there, that dotted line that I'm pointing out now, is the 20-day moving average. And the outer two bands are a 2 standard deviation move away from the 20-day moving average. So you can see how wide those bands typically are. And they do narrow and contract and then expand. But right now, they are very narrow. And that, again, that narrowing usually does precede a sudden expansion in volatility. So we're into an interesting time of the year. September seasonally is a very weak month of the year. And October, we know, is also history has not always been good to October, although statistically October is not a bad month. But often sharp drops in the market have occurred in an October of any particular year.
Which is certainly what happened last year. Garth, and then the top 40, if we look at where we are.
Okay, so the top 40 also is rather boring as well. We've got this 45,000 lateral support area that I keep talking about, and that has been in place, you can see now, since March of this year. The market's tested that 45,000 support on multiple occasions since the push up off that bottom of that support in early August. But what's quite interesting to note here is that yesterday we got a shooting star candle, yesterday being Monday, because we're recording this on Tuesday. And a shooting star is, I've actually zoomed in on it over there in that inset in the chart there, that you can see it more clearly. A shooting star is where you get a candle that has a very long tail to the upside, and then the market comes down and it sort of closes in the lower half of the day's trading range. Sometimes on the low of the day, although yesterday wasn't quite on the low of the day. But anyway, that long tail to the upside indicates that at some stage during the day yesterday, the market was trading higher, quite a lot higher, and then it came all the way back down and gave up pretty much all of the day's gains by the end of the session. And so you're left with that long tail, and the thing is called a shooting star. Now, I find these quite reliable as indicators of short-term tops in the market. So if that shooting star is to be believed, then the likelihood is that we've probably seen a bit of a squeeze out the top yesterday and it's come back down. I think that might very well be indicating to us that we're probably not going to see the top of that shooting star revisited again anytime soon. We might see a little bit more downside in the weeks ahead, potentially, if the history of shooting star candles is any guide.
And in which case you are protected against, well, to the downside, if not to the same extent that you might be in September as you would be in December by the futures closeout, because you've got that.
That's right. Last week for the show, we put on a put spread structure, which is a nice structure, actually. It runs out to the December futures closeout. You're right. I think I've pretty much given up on the September structure. We've only got about a week and a half to go until that one expires. And in all likelihood, it's going to expire worthless unless something dramatic. So I pretty much kicked that one aside, and we're now looking out to the December futures closeout, and we've got a structure there which will benefit us if the market falls, and particularly if the top 40 drops below that 45,000 area, we'll be in a very good position then with that option structure.
And I suppose maybe the top 40 moving in any direction is now dependent on that you want to talk about the weightings of some of the top stocks on the top 40 and the bearing that they will have on the index.
That's right. So this is just a screenshot that I took off the Satrix website. If you ever want to find out what the weightings are of each of the shares in the Satrix 40, or in the top 40 for that matter, go onto the Satrix website and you can actually go and look at the constituents that make up the Satrix 40. And that'll tell you in detail what the weighting of each of the shares is in the top 40 index. So here I've just pointed out the top 10 shares. And you can see that Naspers recently has pulled ahead quite significantly. Sure. The number one spot on the JSE has, it's been between SAB, Miller and Naspers. They've been contending for number one spot for a while. But you can see quite clearly that Naspers has pulled ahead sharply now with a 17.6% weighting in the top 40. And then followed by SAB Miller, which is a 13% weighting. And then it gets progressively smaller from there. But you can see quite clearly Naspers and SAB Miller make up 30% of the weighting of the top 40 index, which is a lot. SAB Miller, we know, is the subject of a corporate action with Anheuser-Busch InBev, so it's very much just a play on the currency now. The SAB Miller share price is just going to move in accordance with the Rand-Pound exchange rate so that it can make parity with its listing in London. Naspers. And that's why I want to bring this up, because we're going to look at the share price of Naspers and the chart of Naspers now, just to give us a little bit of a feel, because this stock, Naspers, has a very important bearing on what we can expect out of the top 40.
So you're not taking any positions on the market today, Garth?
No, I'm afraid not. Boring again. But, to be honest, I think large part this year, I'm glad we haven't been all that active. It's been a very tricky market. So we're playing it safe. And I know I've got downside protection on should the market go lower, which I think is a possibility that might happen now. Okay,
well, let's look at Naspers, because it has had a phenomenal run recently. Yesterday, Tencent had a huge run. I think it's China's most valuable company now?
Yeah, that's right. It is.
And, of course, Tencent has a massive bearing on Naspers.
Yes, that's it. So Tencent is the bulk of Naspers market capitalization, actually. So you really look at Tencent to get a read on what the Naspers share price is likely to do. You can see recently, certainly since the middle of August, we've had, that was after Naspers results actually, or Tencent results. The share price has pushed up significantly. It's gone from 2,100 Rand and it's pushing up towards 2,550 Rand. But from a technical perspective, it's interesting to note that the share price graph of Naspers has been trading in this upward sloping channel for the whole of this year. This graph goes back to January 2016. And it's quite interesting just to note the pattern of trade here, how it seems to have fitted into that channel quite neatly, but also have a look at each of the pullbacks and how they tie in quite nicely with the Fibonacci retracement zones. So here you've got the first rally that we saw from February up into the end of March, and then the share price pulled back, and it retraced back into that zone between the 50% and the Fibonacci retracement. We often call that the ambush zone. So that's where you would look for buyers to potentially ambush the sellers and then take the price higher. Okay. So you'll find often if a share price moves and then pulls back and retraces, it'll often retrace into that 50 to 61.8% zone, and that's very often an area where you'll find some support begin. Perfectly that time on that retracement into late April. Then the next rally that we saw was from May, basically the beginning of May to the end of May. We saw a nice powerful rally in the share price again. And then again, notice how it pulled back into that 50% area on the Fibonacci retracements before it sort of got going again. And once again, now we are in a situation where it's had a very strong rally off the bottom of this channel, and it's rallied all the way up to the top of the channel now. At that area around 2,550 Rand is overhead resistance from the top of that upward sloping channel that I'm pointing out there. So if we, and the other thing to note is that we got an exhaustion gap on the share price up yesterday. So that's where the share price gaps up right at the end of a very powerful move. And often that gap, we call it an exhaustion gap, and it can imply that it's an exhaustion and that the share price then starts to retrace from there. The same thing happened back at the end of May when the share price peaked out that time. So I think there's a fair probability that we now see Naspers starting to retrace a bit. And if the previous trading action is any guide, then we should see it coming down to around about 2,300 Rand, that sort of area where you would then have that 50% and 61.8% Fibonacci retracement zone, where then the share price would probably be more oversold, and that might present the next buying opportunity. I
mean, and going back to your points on the shooting star that you saw on the top 40, to some extent, I mean, would you bring in Naspers to the sort of the last-minute price action you saw in the overall market? Yes,
that's it. That's why I thought it was interesting to point out the trading action in Naspers and then bring it back to this top 40 graph, because if we look at the top 40, with the fact that it yesterday, which is quite a reliable short-term top indicator in my books, and you combine that with the fact that Naspers looks like it's probably exhausted up into an area of resistance, and Naspers being a very heavyweight stock in the index, you tie all that together, and it does sort of paint a little bit of a picture of caution for the near term. And it's for that reason that I'm quite happy to be sitting on the sidelines, but know that we've got that option structure, which we did last week, which gives us participation to the downside if the market should pull back.
I suppose the obvious question is why you might not short Naspers, or why you might not look to trade Naspers if it is giving a fairly sort of defined technical picture. Action has, and obviously the past is no reliable indicator of the future. Yeah. Having said that, though, why wouldn't you look to maybe take a position on Naspers?
Yeah. Look, if you were an aggressive trader, you probably could try and take advantage of a pullback there, and it might well be a profitable trade. But in line with what we do on this show, which is promoting proper trading principles, we don't typically short strong stocks. We'd rather short weak stocks. And many people watching this show will also know that the trading arena is littered with the dead bodies of people who've shorted Naspers throughout its meteor last couple of years. So I don't want to be one of those. I'm not going to fight the trend. I think the safer trade is to buy Naspers on the next pullback.
Okay, I suppose that also begs the question why we didn't buy Naspers at the beginning of the year.
Well, exactly. Why didn't we buy a lot of shares at the beginning of the year? Why didn't we buy DRD Gold, Anglo Gold, Goldfields? We could have picked any gold share, and we could have then gone and sat on the beach for the rest of the year. We would have done much better than what we've done this year.
We wouldn't have had much of a show, though.
No, it would have been quite boring.
Okay, so what does the portfolio look like?
So it's the same as last week, basically. We're up 15% for the year to date. These are the positions we've got open at the moment. So we've got the September option structure, which expires on the 15th of September, and then the December contract, which I put on last week, and that runs out till the December futures close out. So that's all at the moment. We're very well positioned for a pullback in the market, which I would welcome if it comes, because we've got all that downside protection, and then we could possibly look to buy weakness as we go into the fourth quarter of the year.
And just to end off with, Garth, a reminder that people, if they want to subscribe, they can get a weekly email telling them what's on the show.
Yes, if you go to traderscorner.co.za, you'll see that in the middle of the page there's a link for a free weekly email. And if you just pop your email address into there's a double opt-in function, just to make sure that you actually do want to receive our emails. And then we won't spam you. We'll just send you one email every week on a Tuesday at around about lunchtime, detailing what will be coming up on the show this week.
Great. Garth, we'll leave it there. Thanks, as always, for joining us. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner is brought to you by IG.